What's going on, guys? It's Ricky with TechBet Solutions. Hope that you guys are all having a good start to the morning. Today is Friday, June 17th. It is 5:46 in the morning. Jerome Powell is supposed to be speaking. Still waiting for this thing to go live. Good morning. Looks like the market's already taking somewhat of a nice little pullback. We hit highs of about 23.84 during that pre-market session, making higher highs and higher lows. That's up about 3.5 to almost 4%. Here we go.
Well, I want to welcome you all to the second day of our International Role of the Dollar Conference. This is the first annual conference co-sponsored by the IF Division at the Board and the New York Fed. It's also the inaugural conference in the Board's new conference center. So I have been appreciating your all's appreciation, those of you who are here, about the beautiful new surroundings and also your understanding as we work out the kinks of the new hybrid system in this beautiful center. Turning to the content of the conference, in most of the lifetimes of those participating in this conference and those around the world, and I'm sure Professor Eichengreen can correct me if I'm wrong, the dollar has been the dominant currency. It has played the dominant role as the international reserve currency. And I think no more time than these very changing times has it been as important to understand what that means for the U.S. and for the world in the past and in the present, economically, financially, and geopolitically, and related to financial stability. And what we learned yesterday, and I'm sure we'll see today, is that even understanding the past and the present leaves a lot of room for debate. There's a lot that we don't quite understand. We're bringing new data and new tools and a new perspective to that understanding. But even as we understand what's going on now, the landscape is changing. And today we're going to talk about that changing landscape even more than we did yesterday. Yesterday we talked about the facilities that the Fed has put in place that will actually probably change some of the landscape of the international role of the dollar and the dollar funding markets. But more broadly, geopolitical developments and technology are also changing the international role of the dollar. But one constant, as we think about the international role of the dollar, past, present, and future, is the importance of strong institutions and stable and strong macroeconomy for the international role of the dollar. And there are few people more important in that role than the next speaker. It is my honor and privilege to introduce the Chair of the Federal Reserve, Jay Powell.
JP.
Thanks very much, Beth Ann, and good morning, everyone, and let me add my welcome to this inaugural conference on the international roles of the dollar. Thanks to everyone for participating, lending your expertise on this important topic. As Beth Ann indicated, this is the first use of our new Martin Conference Center, and I really hope you enjoy it. So the international financial and monetary system that emerged after World War II has been defined by the centrality of the dollar. It's the world's reserve currency and the most widely used for payments and investments. As outlined in recent work by Federal Reserve Board staff, this global preeminence has been supported by the depth and liquidity of U.S. financial markets, the size and strength of the U.S. economy, its stability and openness to trade and capital flows, and international trust in U.S. institutions and the rule of law. And Professor Barry Eichengreen will expand on some of these themes later this morning, I guess. The dollar's international role holds multiple benefits. For the United States, it lowers transaction fees and borrowing costs for U.S. households, businesses, and the government. Its ubiquity helps contain uncertainty and, relatedly, the cost of hedging for domestic households and businesses. For foreign economies, the wide use of the dollar allows borrowers to have access to a broad pool of lenders and investors, and that reduces their funding and transaction costs. The benefits of the dollar as the dominant reserve currency have, of course, generated an extensive academic literature, and yesterday's paper on the Treasury market by Alexandra Semenova and Frank Warnick extends that work in meaningful ways. The Fed's strong commitment to our price stability mandate contributes to the widespread confidence in the dollar as a store of value. And to that end, my colleagues and I are acutely focused on returning inflation to our 2% objective. Meeting our dual mandate also depends on maintaining financial stability. Our commitment to both the dual mandate and financial stability encourages the international community to hold and use dollars. The wide use of the dollar globally can also pose financial stability challenges that can materially affect households, businesses, and markets. For that reason, the Fed has played a key role in promoting financial stability and supporting the use of dollars internationally through our liquidity facilities. The central bank liquidity swap lines provide foreign central banks with the capacity to deliver US dollar funding to institutions in their jurisdictions. And the Foreign and International Monetary Authorities, or FEMA, repo facility allows approved account holders the option to temporarily exchange their US Treasury securities held by the Fed for US dollars. These facilities serve as liquidity backstops so that holders of dollar assets and participants in dollar funding markets can be confident that strains will be eased when these markets come under stress. That assurance, in turn, mitigates the effect of such strains on the flow of credit to U.S. households and businesses. Both facilities enhance the standing of the dollar as the dominant global currency. The swap lines were extensively used during the global financial crisis, the 2011 euro area debt crisis, and the financial turmoil at the outset of the COVID-19 pandemic in 2020. And the paper on central bank swap lines, presented yesterday by Gerardo Ferrara, Philippe Muller, Vishnwat Natraj, and Yongchuan Wang, provides novel micro-level evidence on the usefulness of swap lines in providing cross-border liquidity to support the real economy. Looking forward, rapid changes are taking place in the global monetary system that may affect the international role of the dollar in the future. Most major economies already have or are in the process of developing instant 24/7 payments. Our own FedNow service will be coming online in 2023. And in light of the tremendous growth in crypto assets and stablecoins, we are examining whether a U.S. central bank digital currency would improve upon what is an already safe and efficient domestic payment system. As our white paper on this topic notes, a U.S. CBDC could also potentially help maintain the dollar's international standing. As we consider feedback from the paper, we'll be thinking not just about the current state of the world, but also how the global financial system might evolve over the next 5 to 10 years. The paper by Jikai Chen and Asani Sarkar, which is on today's program, and our distinguished panelists on this topic this afternoon will provide important insights on this issue. So, to summarize, I'd like to stress the importance of the dollar to the U.S. and global economies and the financial system, financial markets. It's critical that we understand the channels, connections, and effects of the role of the dollar. I want to thank all of you for taking the time to join our discussion today. This conference brings together world-class researchers, practitioners, and policymakers dedicated to understanding and addressing these vital issues. And I do hope you're enjoying the conference. Thanks very much.
Ta-da! That's it. Alright, definitely not much was said. Nothing we haven't heard before. Alright. You can't hear me breathe? I'm like over here, my microphone's like way over there. But, alright. Looks like markets are already beginning to recover. Yeah, that was pretty lame, I'm not gonna lie. Alright, market's down 2.5%. Let's go ahead and check this out. 2.5% on the day. Sorry, up 2.5%. There it goes, picking up some momentum. Yeah, so we'll see if we actually continue this overall uptrend pattern, holding above the moving average, trying to make higher highs and higher lows. Could you guys really hear me breathe? I'm like nowhere near my mic. That's unfortunate. Sorry about that. So what time is Jay Powell speaking? He literally just finished speaking. He speaks normally for like 5 or 10 minutes. So, um, no, they're joking. Heavy breathing. All right, now I know you guys are joking. There's no way. I was like, my microphone is literally like an arm length away. But yeah, TQQQ, overall NASDAQ markets are in the green. Friendly reminder for those that are unaware, market is closed. I think it's the 20th, which is Monday. So whatever that is for you, yeah, Monday, June 20th, the market is closed in observance to Juneteenth. So please make sure that you guys are aware of that. I'm going to be setting up right now for our live session with our Learn Plan Profit group. I wanted to see if you guys had any questions that I could answer for you guys before we close out this live. But yeah, Jay Powell was just going to, I knew it wasn't going to be much when it was announced. Just made a couple comments about what their focus is. He talked a little bit about cryptocurrency and potentially making their own centralized one for the government. And then, yeah, I mean, that's really just it. Nothing that wasn't said or hasn't been said before was said, right? So I can't see any specific reason the market to either aggressively sell off or push as of right now. During the pre-market session, there hasn't been any significant news, nothing like that would cause the market to go up, to go down. It seems like it's already off to kind of a slow start for the day. The last thing that I can remind you or encourage you to do is, regardless of how green today might be, if your intention is to day trade, all power to you, to do the most that you can with that. But when it comes down to swing trading, especially based off of current market conditions, we've been so bearish, making lower highs, lower lows. There's no real indication of an overall uptrend. We are testing the EMA line, as you guys can see here on the 1 hour time frame. This is right around $23 a share, and we'll see. We'll see if we can actually break above it and make some higher highs. I think that would be quite interesting, and maybe a day with trading if momentum picks up. But let's see. Yeah, it sounds like you guys are saying that you guys could hear someone breathe on my mic. Yeah, there's no one else here. So, what's going on, Michael? I took LPP 3 years ago. So glad I did. Thanks for all that you do. No, of course. So I'm going to be setting up right now for the LPP live stream. I'm going to grab some food real quick, and then we can go ahead and get started. So I appreciate those that tuned on in. Friendly reminder, I upload new videos about the stock market every single day. So if you're trying to get a little bit more connected, a little bit more plugged in, make sure you subscribe to the channel, drop a thumbs up. And also, the first link in the description of this video is my free trading group chat. There's over 40,000 members, and you're more than welcome to join and just talk among one another. So I really do appreciate you guys' time. Hope and wish you guys an amazing Friday and a 3 business day weekend. If you guys have any questions, I hope that you know that I'm just one message away, and I would be more than happy to connect. Like always, let's make sure that we end the year on a green